Hi and welcome to Trade of the Week, where this week's celebrity market is the Dow Jones. With traders returning after the summer break, I was looking for some of the froth to come off the stock markets. I was already short of the DAX, but looking for an opportunity to sell the US market as well, and I didn't have long to wait. Tuesday opened with news of a 7% fall in the Chinese market. This, plus the fact that September is a historically lousy month for stock markets, led to a sea of red at the open. The Dow future was marked down in European time, but rallied into the US Open, reaching a peak of 95.50 on a better than expected ISM number. I reckon there was money to be made from the short trade, but didn't fancy spitting into a strong wind at the time. I wanted to wait for a reversal sign first. In this case, I felt confident enough to scale down onto a 5-minute chart using one of my favoured strategies of a 21 period moving average with an RSI combination. The amber warning light came from a red engulfing candle. If I can just show you that one. There. And this completely wiped out the previous 5 minutes and is usually a good reversal indicator. But it's too early to act then, as the RSI was still above 50. My patience was rewarded a bit later when the price crossed below the 21 period moving average. And this time the RSI was below 50. I'll just show you that one. It's a little baby. But even then it wasn't quite time to deal. The strategy I use dictates that I only trade when it's 10 pips through the moving average, which means giving up a few gains, but it also cuts out a lot of the whipsaws. So at around 3.50 I went short of £5 a point at 94.91. Using this strategy I place a stop loss 20 points the other side of the moving average. I just find that's a reasonable balance there. And as I'm a cautious trader, what I tend to do is part close a trade for 30 points, 30 pips in Forex, and bring my stop loss down to break even just to lock in a gain. So in this case I set my limit order to buy back £2 at 94.61 and then bring my stop loss down to break even. Then with a profit in the bag I aim to run the balance. Closing out on my exit trade for the part 2 is more subjective. It could be a candle pattern, an oversold RSI, or the price moving back over the moving average. I sort of keep a look on all of those things at a time. And this trade worked well. Let's put a bit of stake on the table for the weekend. My £2 limit order was filled at 94.61. No ambition! Cried my mate Trader Hindsight. And then with the market in freefall hugging the lower Bollinger Band, I just ran the rest of the trade. My first exit trigger came just around about the UK close. If I can show you a hammer candle. There we go, it's the one I've just missed there. At the bottom of a downtrend, a hammer candle will usually signify a reversal. There we go, that's the one. I didn't actually jump out then, but it put me on red alert. The RSI was showing an oversold position of 16, and I actually closed out when the next 5-minute candle didn't trail the Bollinger Band any further. It started on a straight line, so I closed the trade, buying back my remaining £3 at 93.50. So all in all, that was 30 points on £2 plus 141 points on the £3, giving me an overall profit of £483 for the afternoon's work. Not bad, not bad. The question of running the bet overnight is a tricky one. When the markets were more straightforward, like during last autumn, I felt more relaxed running them overnight. But at the moment, the markets are far too volatile. There's too much of a Chinese effect at the moment, so I just felt happy taking my money off the table. Have a good weekend.